It's never fun to be the bearer of bad news, especially when you're running a public company. This is Steve Place, the lead strategist at Market Traders Daily, and today I'd like to share with you a crisis investing tip that's wrapped around a personally horrific story. So a CEO never has to defend their company when stock prices are going up. It's only after the investors are bailing on the stock that you have to get out your PR department and try to stop the bleeding. And of course, when you come out and announce that the company's doing great and that there's no problems, the stock's going to drop further because you've now put blood in the water. You've shown weakness, and that momentum can build on itself. In the corporate world, there's only one signal I look for that tells me that the bleeding is done and that a profitable investment is setting up. I'll get to that in a moment, but first I want to share a nightmare I had to go through with delivering bad news, because these corporate guys, they think they got it bad, but it could be so much worse. So about 20 years ago, I was the president of a fraternity at a large college campus, and the major fall event was homecoming. We would pair up with a sorority for a week of partying and competing with some other organizations for a trophy, and that doesn't really matter anymore, but it was important at the time, right? Matching up with a sorority was very political. I'm talking palace intrigue at Versailles political, and you would compete with other frats to get the sorority that you wanted. And there was spying, there was bribing, there was deal making going on all underneath the surface. And that's where I got into trouble. We decided to one-off a sorority, which meant you went all in on getting a deal done with only a single group, which means you ignored all the others. Folks, don't blanket reject a group of 150 women. It might come back to get you. And this was a high risk, high stress move. And for a college kid, it's high stakes. We're not in the real world yet. So we take this entirely too seriously. Another fraternity also pulled a one-off for the same sorority, and we ended up losing. That sucked, but that wasn't the worst part, because we still needed to pair with a sorority. And my spies told me that another sorority would be willing to consider it if we begged. So I'm not only having bad news rain down on me, I now have to go in front of a young women's organization and explain to them why we thought they were second best. And I walk over to their house with 8 of my brothers who were all dating someone in that sorority. We brought over flowers that we had planned on bringing to the other sorority when they said yes. And I walked through those double doors and it was dead silent. Folks, do not ever piss off 150 women at the same time. I had 150 sets of eyes throwing daggers at me, and I had to take every single one of them. It was a struggle session, right? I apologized. I said that the one-off was entirely my idea and that I brought shame upon myself. And some form of a deal had already been made before I apologized, but I had a feeling that they wanted me to sweat a little bit. And all of this went down. God, it was horrifying. All of this went down on a Sunday, which is the worst time to give out bad news, including the stock market. When you see a press release come out from a company on a Sunday afternoon when the markets are closed, it means you are desperately trying to stem the bleeding. And your shareholders, probably from the week prior, they're staging a revolt. And if it keeps up, the board's going to fire you. Or an activist investor comes forward and fires the board and you. So a Sunday press release signals a panic. It should be avoided as much as possible. So let me give you an example. There's a logistics company that I'm following, and they announced a merger shortly after their earnings report. Investors hated the deal. The stock dropped 30% in 2 days. It was so bad that they decided to release an investor Q&A on a Sunday night to try and stem the bleeding, right? It doesn't work, right? There's blood in the water. The stock eventually bottomed out after getting cut in half from its highs. It's down 50%. Buyers did show up, but it wasn't because of a press release. There's only one way I know to quickly stem the tide of selling. The CEO and the board need to put their money where their mouth is, a little bit more skin in the game. In other words, they need to buy shares. And the leadership of this company did. You had the CEO, you had 3 other C-suite investors by some serious size. You had 8 out of the 11 directors on the board that bought thousands of shares. Now that's a signal I want to see, because at nearly 50% off, leadership needs to believe that they're getting the best deal on shares that they'll see in a decade. And right now it feels like it. If the merger that they're going through truly is accretive, like leadership says, and they've put their own personal money behind the deal, this stock is set up to be one of the best investments buys this year. Now, you may be wondering why I'm following some little known logistics company. The truth is I wasn't. I'm following the share buys from the company leadership. That's where I get my investment ideas. It is the best way to find profit-rich, opportunistic setups in stocks without a ton of risk and guesswork. Now, I've put together a free training that shows you step by step how to find opportunities like this one. Click the link below and join this training, and I'll see you on the other side.